Welcome to the Techno Fundamental Report for December the 12th. I decided to do the report a couple days early this week simply because I'm going to be on the road traveling and won't be here on Thursday. So, Godot Never Comes, Waiting for Godot, kind of a crazy play, was on Broadway years ago, actually in London. Samuel Beckett. Basically, I heard this said by another analyst who said, the recession that we keep looking for is kind of like waiting for Godot. And as I point out, non-farm payrolls look pretty good to me. I don't see a recession here. I mean, it doesn't look like this. It doesn't look like this. So you kind of have to realize that when you're listening to the financial media, you kind of have to be a little bit contrarian. It's not always going to be that straightforward. It's just not that simple. Now, if you make a mistake and you do not correct it, this is called a mistake. Confucius. This book that I recommend called The Psychology of Money discusses the J.P. Morgan report, where it really, just paraphrasing here, it just says most public companies are duds. It's really unfortunate, but you really need to check out companies before investing in them, because of this study, 40% of the Russell 3000 between the years of 1980 and 2014 lost at least 70% of their value. 40% lost 70% of their value and then never recovered. So the main point is you've got to pay a lot of attention to your stock selection, which we're going to talk about right now. We use trend following. We think it's really difficult to predict. We don't even think predictions are a valid way to go, but very simple. You're looking for a trend and you want to get on that trend. So here's the NASDAQ going back to 1980. You can see the uptrend. You've had difficult periods in here, but the long-term trend has been up. So one of the things that we keep an eye on is something called a flat base. So what is a flat base? A flat base is a period of time where the stock consolidates, because you have to think of it this way. Buyers, sellers, buyers, sellers, buyers, sellers. So then once you get a breakout above the base, it's basically saying that the buyers are starting to win. So here's an example of Oracle. And this is a pattern that makes a lot of sense, and you should look for these patterns when you construct your watch list. You should be, back then we should have been watching this stock. So this goes back to 1999, and this is Oracle. So you can see the flat base, and then you have what you call a base on base, and then you get the breakout and you get the ascension. So look for flat bases, look for bases. That's the main thing. I'd say one of the biggest mistakes I've made in the past is buying stocks that are too extended in price. So let's just take a quick look at the indexes just to see where we stand. NASDAQ looks great. I'm using the trend meter here. So the way the trend meter works, if you're above 60, and this particular calculation is roughly 81, it says that the trend meter says that you're in an uptrend. So here's the mid caps. Much improvement here. Trend meter's got a reading of 72, so it's in an uptrend. New York Composite, uptrend, reading of 81. And most importantly, the small caps are really starting to move here and break out, reading of 72. So if we can get the small caps and the mid caps going and broaden this market out and improve market breadth, that would be a real positive. Now here's the S&P, reading of 83, and it's basically still in an uptrend. Looks good. Small cap, I wanted to mention the advanced decline line because we were talking about the small caps, but this is the highest reading for the advanced decline line in quite a while, and it's definitely in an uptrend. So the small caps, if they can start leading or just quit being they've had a really tough time. If they could just stabilize, I think that's all we should look for, but it'd be great if they did lead. Mortgage rates, you can see they're continuing to come down. This is going to help the housing market. It's going to help car sales. And hopefully it's an indication that inflation is starting to come under control. In fact, the inflation number came out this morning, the CPI. It was up 0.1%, almost flat. Was predicted to be flat, but it does look like inflation is improving. Here's the volatility index, one of the most favorable readings we've had on the fear index in quite a while. And so I would keep an eye on the VIX. VIX continues to look promising. Now, on our three economic indicators, just to refresh things, so you can see here, interest rates are definitely in a downtrend, close to breaking below that 200-day moving average. Oil is in a downtrend, did break below 70, kind of popped back up again, and the financials, meaning the banks, are looking much better. Here is the new lows on the New York Stock Exchange, well under control, very positive. Yesterday we only had 19. We want to see 40 a day or less over an extended period of time, which is what we're getting. This really is looking like a bull market. So here's a stock that we own that I just thought I would mention. This is Arista Networks. This is a technology stock. As you can see here, you know, the main thing about a base is you want it to be, the stock to be in an uptrend. And you can see here kind of a shakeout in here. Then you got the buy signal. You've got a nice flat base going, and then it's breaking out again out of that base. So Arista looks interesting. Uber, this is our biggest winner. It's doing really well. You can see here again, somewhat of a flat base, a little bit descending here, a little bit of a V. Not as you really want that flat base, but you kind of have to be contextual here. Our indicators on the market are positive, so when we see a breakout like that, we really start paying attention. So if you have any questions, please let me know. Thank you very much.